Now we're going to look at double taxation relief in section 4. For the tax exam, we only need to have an awareness of the concept of double taxation. Sometimes we will see individuals and companies being subject to tax in different jurisdictions at the same time. So not only just being subject to UK tax, but also having liabilities to tax in other countries. So for example, we may have a UK-based employee that is required to work in different locations during the tax year. And if that happens, it's quite possible they will be subject to UK taxation, but also be subject to taxation in those other locations as well. Generally speaking, the UK tax legislation doesn't seek to tax taxpayers twice on the same income or on the same profits. And that applies as a general rule across all of the taxes that we look at. So for example, it applies to income tax, it applies to corporation tax, capital gains tax, inheritance tax, etc. And generally, the way this is done is if you are taxed twice, then you pay your UK tax, so you calculate your UK tax liability, and then you get a credit for the tax that you have paid overseas. We call this double taxation relief. And generally, the double taxation relief will be the lower of the UK tax that you've suffered on that overseas income and the overseas tax that you suffered on that overseas income. Alternatively, as an alternative to this double taxation relief, the UK will have a tax treaty with various different jurisdictions. And if it is applicable, if our individual or if our company has a liability potentially to tax in the UK as well as that jurisdiction, if a treaty exists, then we'll have a look at that and we'll see what it says. And typically that will say that source of income and profits will be taxed in the UK, or alternatively taxed in the overseas jurisdiction, or give specific details of how it should be taxed in each jurisdiction.